All right, good afternoon, traders. Thanks for joining and taking your time to check out this week's trading webinar. So right off the bat, as always, quick test of audio and visual. If you can hear my voice and see this opening slide, Shark Indicators host Lizard Trader, go ahead and type a Y in the chat box for me. Awesome. Thank you, Javier, Sean, Gene, Terry. Cool. Thank you, guys. And be sure to use that chat to ask any questions throughout the webinar, and we will get to those throughout and after the presentation. Now, most of you should be familiar with my voice by now, but for any first-time viewers or Lizard Trader members tuning in for the first time, my name's Ty. I'm coming at you guys from Charlotte, North Carolina, and I handle the business development here at Shark Indicators. I've been involved in the trading industry for several years now, and outside of this kind of stuff, I also enjoy boxing and Brazilian Jiu-Jitsu. So I don't know if any of you traders are also into martial arts, but it's a great way to relieve stress, which we all know trading can be sometimes stressful. So on that note, let's before I pass it off to Kris, let's take a quick look at the risk disclosure. Take a minute and look this over. Futures, foreign currency, and options trading contains substantial risk and is not for every investor. And just to answer the question that I know is coming, this webinar is being recorded. So if you have to leave early or anything like that, just look for an email from Ty at Shark Indicators, and I'll get the replay link out to you guys by tomorrow morning at the latest. Now, most of you are familiar with Kris Lassen. He's co-founder and CEO of Lizard Trader with Harry, aka Fat Tails, who many of you should recognize from Ninja Trader Support Forum and Futures.io. Kris is an early adopter of our software, which makes him a choice presenter for events like these. And that's really not even scratching the surface, but I'll let him handle the rest. So give your attention to Kris. He's going to show you what you all came here to see. So at this point, Kris, I'm going to promote you to presenter so you can introduce yourself to some of the Shark audience here, and then you can get right into it.
Hello, everyone. I hope you can hear me. All right, let me just see if I can get the right monitor selected here. You should be seeing the Lizard Trader logo.
Yep, your audio is coming through loud and clear, and we are seeing the right screen.
All right, super. Well, thanks again for the intro, Ty. Always a pleasure to do these events for the Shark Indicator community. So appreciate the opportunity once again to do that. Today's presentation will be about a price action setup we discussed during an Trader 8 event last month. It's a setup that uses our Session VWAP package, which some of you are going to be familiar with here today. And we'll also look at how we can use this together with the reversal patterns, the auction bars specifically. But for those of you who do not know us, we're based in Berlin, Germany, and that's me to the left here. Our indicators, as Ty mentioned, are programmed by Harry, also known as Fat Tails. And yeah, he's programmed some of the most downloaded indicators for the platform. All the ANA indicators for NT7 are his, and these are now available as the AMA series indicators in our indicator library for Ninja Trader 8. As for myself, I previously ran a company focused on sentiment analysis, applying concepts from behavioral finance, looking at how emotions and psychology influence investment decisions. And that's also part of what we'll talk about here today, in particular from a institutional point of view. Job performance, reviews, bonus payouts are often linked to where the institutional traders execute relative to the volume weighted average price, or the VWAP as it's more commonly known. So by looking at where these institutional traders are likely to buy or sell, you can find dynamic and otherwise hidden supports and resistance levels. But more than that, the VWAP can also be used for trend bias, and we'll use that info to determine the reversal patterns we're looking for. As I said, we're working with reversal patterns as defined by the auction bars, which is another of our flagship indicators. And then we'll finally look at how to put all of this together in a strategy template using BloodHound, setting objective trading rules to test the statistical probability of the setup. All right, so let's get started with the volume weighted average price. This is, as I said, something institutional traders pay a lot of attention to. The reason is that it's a price benchmark to control execution cost, and how well they execute can be objectively measured with the standard deviations of the VWAP. So it's safe to say that these guys are trying to position themselves as close as possible to this benchmark, and therefore, by knowing whether institutional traders are likely to participate or take a step back from the action, it will be easier for us to spot scenarios that have the most favorable reversal setups. So this is a daily VWAP chart of CL crude oil, 15 minutes. And so all you need here is price and volume data, and the calculation starts with the first transaction of the session. This daily VWAP chart, as I said, so it's anchored at the start of the full session here. You can also anchor it at the start of the regular session if you like. And yeah, there is a red staple line here when prices are moving below the VWAP, and over here in the previous session we saw that it was moving above, so you have a blue line in that case. And this slope, this VWAP slope, is your first long short bias indication. So upslope will be a long setup bias, and downslope a short setup bias. And coming back to this institutional participation, that's most likely to take place in the value area around the VWAP. So in a downtrend like this, we're looking to enter once the prices retrace back into the value area that's within one standard deviation of the VWAP. And that's where the institutional traders are likely to come back to the table, so to speak. And so when you're trading downwards towards the outer standard deviation bands here, that's more an area to look for exits. And you see that here as well. They shoot up here and then coming back, shoot up, coming back in. And yeah, other than that, you also see that the VWAP here is speeding up during times of high volume and slowing down on low volume. So it's a dynamic way of accounting for the obvious truth that more money traded means more market impact. So it's the capitalist democracy at work, with one vote per contract, not one vote per trader, which reflects something I think we're all willing to accept, that the market is driven by these large players, and so greater participation, greater importance, and therefore greater emphasis on the higher volume candles relative to the day's total here. So as I said, the most basic way of using the VWAP as a trend filter is just by looking at whether it's sloping up or down. But other than that, our VWAP also comes with the option to plot the VWAP level of yesterday, which is what we see here, yesterday VWAP, and you trace this back here and you get to the VWAP where it ended up at the end of last session, as well as these value area high and low levels. So 1 standard deviation levels of yesterday's session. And yeah, these are important to pay attention to, and that some of the most or the best short-term setups are found when prices have moved out of the previous day value. So we saw that happening out here, breaking out of this pretty slim value area here, but it illustrates the point. And on the opposite end of things, if the market trades out of the value area here but fails to follow through, there is a good possibility of reversal here. So I have both examples here: failed breakout of the value, and then a really strong trend here once you do break out of value. So you can also use rolling and weekly and monthly VWAPs to supplement these bias readings here, comparing that to what the daily or prior day VWAP readings are telling us. So our VWAPs also come with mid standard deviation bands. So here we have the 0.5 mid band, and this would be the 1.5 mid band. And throughout the session, you often see that these levels also work as these dynamic support resistance levels. Here we see this is clearly support for an extended period of time here. And this is the first standard deviation. Lower standard deviation is this resistance here, but you also see meaningful resistance here at the 0.5 mid band. And these mid bands are really useful for the larger time frame VWAPs as well, the weekly and the monthly and the N monthlies, where the regular standard deviation bands are often further apart from one another, and therefore these bands can be very helpful in determining dynamic support and resistance levels. Just have to have a little drink of water here. I'm not used to be speaking so much. Most of the time it's my wife that does all the speaking, so this is news to me. All right, so that's a quick intro to the VWAP and how you use it. Next, we'll take a look at reversal setups and see how they relate to the sentiment that we see in the market. Trading is ultimately based on fear and greed, so once you know how to identify these patterns, you're learning how to read human behavior as it appears in the market. And of course, the oldest part of our brain, the reptilian brain or the lizard brain, is supposed to keep us safe from danger. And that's what we often refer to as survival instinct, or this flight or fight reaction. And becoming a successful trader involves understanding how the trader's mind works, your own as well as your counterpart. And one of the clearest expressions of this is when we see price rejection in the market. And that's what this looks like. You have a situation where prices within a short time span see a extreme move, only to be rejected at a certain level and then pushed back to where the candle opened. And so these are spikes, really easy to spot on the chart because of the way that they look out. And so traders will react on them. And for these bearish spikes, we have a long upper shadow, considerably longer than the candle body and the lower shadow, whereas the bullish version has the opposite geometric makeup. So a long lower shadow, which is much bigger than the body and the upper wick. And we also have key reversals based on the same concept. We're looking for price rejection again. But these patterns form in the course of 2 bars, so they're not as easy to spot on the chart. Basically, if you're setting a new high followed by a lower close, it marks a reversal down. And this is just one definition of a reversal pattern, but in the auction bars, you have the option to have more restrictive definitions. For example, saying that you want a close here below the low of the previous bar. But this is what we call the reversal A type definition, and that is the same here in the long scenario where you set a new low and you have a higher close than the previous, and then you have a reversal up pattern. And next, we'll have a look at where to look for these reversal patterns, where they're particularly interesting. Markets are range bound for a lot of the time. It's said to be range bound some 80% of the time. So definitely makes sense to keep track of reversal patterns that plot at the current range, high, low, and midpoints, and align that with what we see in the VWAP. And for that, we have developed the auction bars that I've mentioned a couple of times now. In a nutshell, it keeps track of 2 things: the current trading range, the auction range, and then specific types of reversal patterns, namely the spike and key reversals. So this is a 5-minute chart of crude oil, and the idea is to find this higher time frame range and then look for reversal patterns at the upper and lower range as well as the mid range. And so the higher time frame range is what these horizontal lines are here. It's what we call auction ranges. It's generated by a secondary bar series. So in this example, we've created a 60-minute range or auction range. And bars that break through these ranges are what we call the auction bars. And once that happens, the indicator will start looking for the new high and low points set during the higher time frame auction range. So we see here we have a breakthrough, and then we see this high and low level for this last 60 minutes. And then we have a second break or a second auction bar and a new range plotting here. And what we see first here is a bullish reversal plotting at the mid-range of this new 60-minute range. It's a key reversal pattern with a new low and a higher close than the previous bar. But as you see here, it's really going against what the larger time frame traders are telling us, namely that we're breaking the 60-minute ranges to the downside. So although this turned out to be a favorable trade, it doesn't look particularly good from a risk-reward perspective. You're better off taking trades in the direction of where the ranges are breaking here. So that would be this bearish reversal at the upper edge of the auction range. Again, the definition for this reversal pattern is setting the higher high with the down close compared to the previous bar. And as I said, this one is aligned with the higher time frame ranges, giving us a better probability and risk reward ratio. Another example here, again, this is a 5-minute chart of crude. This time we're looking at breaks to the upside of the auction ranges. The auction range is again the higher time frame range, so 60 minutes in this example as well. And here we're looking at spikes. You see how they sort of stand out on the chart, really easy to spot. And we have these auction ranges that are breaking to the upside. So this turns out to be a really nice spike pattern that shows up here. So it's this geometric outline of the bar, the open and close, almost identical, with the large shadow plotting here at the lower edge of the auction range, which is moving upwards. And up here we have the opposite, a bearish spike. Again, a small body, but a long upper shadow and a small lower wick. This again being another example of going against the overall bias and guided by the upwards breaking auction ranges. So again, you see these auction ranges breaking to the top, to the upside, and then going against that is obviously higher risk than if you're taking reversal and spike patterns that are following the breaks in the auction ranges. I just quickly want to mention that there is a few things going on in the background here besides defining the higher time frame ranges and the reversal pattern definitions. We have a definition for the range and volume of the reversal pattern or reversal setup bar. It needs to be significant range and significant volume when compared to the reference period. And then you also have a minimum shadow size of the reversal pattern. Again, looking at the reference period for the shadow sizes here. And then in the background, we also have a zigzag filter marking the higher highs and the lower lows of the last n bars. So again, for reversal patterns, you need to set a new high or a new low when compared to the n previous bars. So that's what the swing strength definition or the zigzag filter takes care of here in the background. You can also set it to plot, of course, but I just think it gets a little bit busy then. So I like to keep it clean like this. But you can also display the zigzag and the ticks traveled for each swing and the volume in each swing and a couple of other nice features and ability to customize signals according to your risk tolerance level here. So looking at this with the daily VWAP, we see that you can take these reversal setups going from inside the VWAP value area towards the outer standard deviation bands. So those are what we call inside out trades. And you can also look for outside in trades using the outer standard deviations to find areas where the institutional traders are likely to step back and going back in towards the VWAP value. Those are, of course, higher risk. And other than that, it's important to remember that these patterns are only setups until actually confirmed by price action. So for this bullish one here, we had confirmation once the high of the setup bar was taken out, already here on the next bar, confirming the signal. And then the way to manage this is to just set a stop limit order at the high of the setup bar so that a trade is entered at the moment that this level is broken. And then stop loss is generally set just below the low of the setup bar. For the down reversal here, obviously it's the inverse. You need to take out this low here in order to get a signal, which again happened here directly on the next bar. And then the stop is set above the high of the setup bar. So next step is to pull it all together using BloodHound. You can then specify your trading rules in an objective form and test the statistical probabilities of success. And generally, we think here in terms of setups and triggers, what will determine the situations or scenarios that create your trading signal. So that's what we've talked about here with the VWAP levels and the reversal pattern definitions. Good news is it's fairly easy to do this with BloodHound. You don't have to be a programmer to do it. It's a really fast and efficient way to find out whether the system idea that you've been thinking about has some validity to it. So in the next couple of minutes, I'll just go over the BloodHound template that I've created for this setup and show you the statistical probabilities of what we've talked about so far. So I've tested this setup for my time zone, so Central European time, 9:30 till 2 o'clock, before the US pre-session for crude oil. And yeah, we're looking for reversal patterns that plot above or below the prior value levels. So in other words, we want to be long above value area high and short below value area low. And then we align that with the slope of the current day VWAP, the rolling VWAP, or the weekly VWAP. And so these would be the inside out scenarios that I talked about, where reversals are plotting within the current VWAP value. And on the other hand, if you see prices move back into the prior day VWAP value area, then I'm interested in looking for a oversold or overbought reading in the current VWAP for outside-in trades. Reversal patterns in this area can signal institutional interest in buying weakness or selling strength. And of course, you also want these patterns to plot at the auction ranges, at the higher time frame ranges. So that would be the range high-low or the mid-range. And as for exits, we manage those based on the auction ranges, support resistance levels, as well as the VWAP levels that we've talked about. And we'll have a look at that coming up here. This is an example of a trade from last week. There's a couple of things going on here. First, we get stopped out right on the first trade here. It comes just as the market is trying to break above the prior day value area high. And it's aligned here with the pre-session high, as well as running into the second standard deviation here. So this is definitely a outside-in trade. But it's also this failed breakout that I've talked about here previously. And talking about trade management. I've set up a template for this in Blackbird that mimics how I trade this live. And basically, once BloodHound detects a signal or a reversal setup, it places a stop limit order just below the low of this setup that will trigger within 3 bars. Usually it triggers right away. That's just how reversal patterns work. But if it doesn't trigger right away, the order stays in place for 3 bars and then gets canceled. And in a situation like this, we're coming in here on the current VWAP. So that is a support coming in from above. And there is a management rule in this template that says if you're up 10 ticks on this and you're coming in on key support resistance, you're looking to take off 1 lot. And so this is setting a pretty tight stop loss, trading stop loss on this first lot. And then the second one here just goes out as we approach the US pre-session here. So that's the end of my trading window in this case here. And this would be a inside out scenario. We're way above the value area high in this case, and we're going with the weekly VWAP, which is up, taking a bullish reversal pattern that shows up here at the mid-range. And once we're coming in on the second standard deviation here, it will move in my profit target for the first lot, as I'm pretty sure that there will be a pullback up here. Statistically, less than 5% of the day's transactions take place in that area, so always a good place to lock in some profits. And if the pullback continues for any more than 3 bars, I have this SMA 3-bar rule in here. So if this starts dipping out, then I've seen the second standard deviation recently, then this stop loss here will be tightened further in order to take what's on the table here. So as far as the statistical probabilities go, as I mentioned, this test was run on the EU session. Smaller moves, but pretty interesting stats here the last 6 months. A profit factor of 1.87 on a pretty even distribution. A real challenge to get a long short system going and a heavy bias, which is what we've had in the crude the last few months. So average time in the market here is about 40 minutes with a total net profit of about 3,500 with a drawdown just shy of 900. So nothing too crazy, but if you look on the risk reward, it's terrific. You risk 900 and you get 3,500 back. And that's after commission, which is at 465 here. So with our tools, it's pretty much what you see is what you get. There is no secret black box here at Lizard Trader. It's a pretty tried and tested concept, well known to institutional and professional day traders alike. Everyone knows what the VWAP is, and everybody knows what a reversal pattern is. The question is how you put it together. And yeah, as I mentioned in the beginning, traders have voted these tools the industry standard time and time again. Half of the top downloads of all time over at futures.io are Harry's. So I guess that speaks to itself on how these tools are viewed in the trading community. And so if it's all right with everyone, I'll now transition into the webinar promotion with the premium indicators that we've prepared for you this time around. It's a pretty nice deal, I think. Well, there's something for both new and existing BloodHound users to take advantage of. The offer includes all the tools that we've talked about here today. So the Session VWAPs, the auction bars, and then we're also throwing in the multi-time frame opening range, along with a couple of really nice bonus specials. I haven't really gotten into a detailed description of everything that's included in the package or in the indicators. But the VWAP package, for example, is quite extensive. So it has the daily, weekly, monthly, rolling, as well as quarterly, bi-monthly, yearly, but semi-annually calculations. And did I mention the rolling VWAP as well? And there are time-weighted average price indicators, as well as range weighted average price, which is really nice if you're trading instruments that do not have reliable volume information. Then you will want to work with a range weighted average price calculation. And the auction bars also have a lot of additional features that I haven't gotten around to talk about today in detail. Excuse me, there is a couple of auction bar special webinars up on my YouTube channel. So you can swing by there if you're interested in additional information. You can find me under Kris Lassen, Kris with a K. And there's also a couple of in-depth presentations on the opening range setups there as well. So you might want to check that out as well. And as part of the promotion here today, we also have a membership to our indicator library for you. This is a really valuable resource to fine-tune your trading. We have some 85 plus indicators in there. It's a toolbox with a lot of categories. So you have trailing stops, trend analysis, statistical indicators, volatility, you name it. And with that, you also get our indicator spotlight newsletter, where we feature one of the library tools about once a month. So pretty nice add-on here. And so this is the bundle that we have prepared for you today with BloodHound, the Session VWAPs, the auction bars, the opening range, and the indicator library. And I'm throwing in also strategy template and consulting session in here to get you up and running here, taking care of the install process or workspaces, what have you. So normal price for all of this is $1,900, and so at a total of $1,495, you get a pretty good discount on this, about $400 off. Or if you look at it the other way, you get BloodHound for 50% off here with this deal. So pretty nice offer if you don't have BloodHound here. And if you already have BloodHound, the normal price for this bundle is just north of $1,100. But today we have a price of $7.95, and we will have this up until the end of the week. So make sure you take advantage of it before it expires. The beauty of these tools is that they're pretty universal and work for all instruments and bar types. And this is where you go to check out some more information on it. It's really not that complicated to understand and execute on either. There is a learning curve, there's no question about that, in particular when it comes to BloodHound and finding out how that works, but it's not rocket science, and with some templates here, you should be able to get off to a good start. So as I said, the promo here is up until the end of the week. So head on over to listatrader.com/shark webinar and check out some more information on it. And we also have a special featuring our indicator package here together with Blackbird, or both BloodHound and Blackbird. And that includes additional strategy template and consulting session, helping you hit the ground running with these really powerful strategy development tools. And before we sign off here today, I just want to come back to the reptilian brain, or the lizard brain again. It was originally meant to keep us safe from danger with the flight or fight survival instinct. But I think we can also learn something from their hunting technique. It looks as if they're just sitting around, not doing much most of the time, but they really have a pretty sharp eye for what's going on around them, conserving energy, not chasing around the next opportunity. They've learned that the most efficient use of their resources is to sit patiently, listening, looking, and waiting for the moment when there is an opportunity to grab what's right in front of them. And as a trader, it's a similar situation. It really pays off to have a clear and simple strategy that you can understand and act with confidence and conviction on once the opportunity is there. So you have the price patterns that we talked about here today, reflecting the human sentiment, aligning that with what the institutional investors are likely to see when they're looking at the VWAP. And that's when you head over, you know that you're up for a good setup. All right, so with that, I'm going to hand it back over to Ty and open up
Kris,
the Q&A.
Yeah, you can actually just leave it on your screen, and if you want to undock the questions panel, I see there's a few questions in there for you.
Yeah, let's see. Questions. All right. So is your VWAP different from the standard VWAP that you get on most platforms? Yeah, there's a couple of differences, I think, that are important. I think I mentioned some of them. The ability to look at the previous VWAP levels. They work as support resistance levels often and are important to be aware of. This value area high and low that I mentioned, certainly not standard. The mid bands, also not standard. And then for extended trading sessions, that's also something that we have incorporated in our package so that you can keep track of that. Can it be used with Uni-Renko, and what setting for ES? I'm not using Uni-Renko myself. I know that we have some users that use Uni-Renko. Generally, not the auction bars is not the best indicator for Uni-Renko. I think you have to play around with the settings a little bit and see if you can make it work. But otherwise, you can use the VWAP, of course, as well as the opening range. And yeah, if you're not sure, then best is probably just to sign up for a trial with us, and you can try it out for yourself before you make a purchasing decision. So the VWAP is a line, and you have standard deviations. Yeah, we have first standard deviation, second standard deviation, and third standard deviation as the standard bands. And then you can activate these mid bands as well, Mike. So there's a couple of different options for you. You can turn them off as well if you would not like to display them. And Mike, you also ask, how do you know how to anchor the VWAP? I generally use the full session. For some instruments, I also have the regular levels displayed. If there's really high volatility, we'll end up with different prior VWAP levels from the regular to the full session. And so for support and resistance levels, it's a good idea to display both. I don't have both the current VWAP full session and the regular session at the same time. I'm more interested in seeing the support and resistance levels that are generated from the prior VWAP levels. How similar is VWAP to market profile at 70%? Not sure, because I haven't really worked with the market profile, Mike, but I'm sure Harry would be able to answer that question. So if it's all right with you, I'll check with him and get back to you on that. Are your auction range levels similar to a Darvas box? Not really. Is the BloodHound with the NinjaTrader 8 version working, or only in beta? It's still in beta, Wolfgang, and I've heard that it's progressing very well at the moment, so it should be in a public beta fairly soon. But probably best to ask the Shark Indicator guys directly about that. Is there a recording? Yes, there is a recording. This is not available for Think or Swim. We're a NinjaTrader dedicated small team here, so it's a matter of resources to keep the support going here. So Jeffrey, if I find it best to use the ETH or the RTH data series, you trade the NQ. Like I said, I think I would use the ETH, partly because the reason is that it's anchored, right? So if you're trading I'm assuming that you're trading the regular session. So once you get to the regular session, if you start anchoring at the regular session, you will have to wait some time in order for it to have added enough weight to be meaningful. And if you work with the ETH anchor, then it's already ready to go once the open comes around, and you'll have meaningful value and outer standard deviation areas, whereas if you anchor it right at the regular open, you will have to wait half an hour or so before it can be meaningful. So depending on your setup, I would generally go with the ETH VWAP, and as a supplement, I would use the RTH prior VWAP levels for reference when it comes to support resistance and prior value. Jeffrey, you ask how I use the daily, weekly, and monthly VWAP in concert with one another. Well, the setup that referenced the inside out trades here, as I said, it's basically looking to see if the prices are trading outside prior value. So if we're above value area high of yesterday, then we're looking for long setups. But I want to have confirmation from either the daily VWAP, the rolling VWAP, or the weekly VWAP. So they have to confirm that that reading of being above or below current value. So I think that was the questions that I see up here. If there are any other questions, feel free to speak up now. Otherwise, you can also get in touch with me in the contact form over at LizardTrader, or you can also drop me a line at info@lizardtrader.com. And yeah, I think with that, I'm just going to wrap up the presentation here. Thanks a lot for checking in. I hope it's been of value for everyone, and I look forward to hearing from you guys soon. And in the meantime, take care and bye-bye from Berlin, Germany.
Awesome, Kris. Thanks again for presenting. Just the kind of stuff the Shark audience likes to see. If you guys have any other questions for Kris, like he said, contact him at info@lizardtrader.com. Any questions specifically for Shark, as always, support@sharkindicators.com. If you did tune in late, don't worry, I'll send the recording link via email tomorrow morning at the latest, so just look for an email from Ty@sharkindicators. So thanks again, Kris, and thank you, traders. We'll see you guys next week.